Welcome to this edition of Stocks with the Manual of Why Investment. Today we're looking at Nvidia, a case study of see what lessons can we learn from Nvidia. It's a very recent case. It went on a long run, um, making incredible gains in the year 2024. And I think now there's a bit of a pause in the price movement. So we wanted to look at some learnings that we can learn in NVIDIA so we can use that to find perhaps the next NVIDIA or to improve our trading. Yeah. And then always we ask you to take time to look at our disclaimer. But let's get to the interesting stuff. Okay. So what can we learn from NVIDIA? The first thing is that I wanted to share with you is a breakout with volume. You can see this long area of consolidation, really nice to see. Long area of consolidation where the price barely went anywhere. And then it broke here, early 2024, around January, with big volume. Can you see that? With big volume. And then that triggered that move that went all the way. And then another bit of some consolidation, and then another break with big volume um, um, in May. So again, the first thing that is so obvious is a break um, above area consolidation with big volume. So breakout does work. It works in Nvidia and it will work in any other stock. So look for breakout with big volume in your stock and act accordingly. Next is consistent top and bottom performance in terms of earnings. So top and bottom means beating analyst expectation in terms of earnings per share and revenue. And before the big run, if you look at this earnings report, they were all solid performance, top and bottom, very good. And that powered this big surge in price. So, as a matter of fact, this should be the first thing I would look at. Does the company has a good track record of earnings, of performance, judging using earnings per share and revenue as a criteria. So very important for Nvidia. It was a very solid thing to see. The next thing is gap up. Gap up, very important, very easy for as far as I'm concerned. There was identified two gap up here for you. Post this earning, there was a big jump in price from here to here, and there's a big gap. And then that's where I put this mark here, and that big gap up powered this stock high. Of course, there was a retracement, and again in that June, May, there was another gap up again after earning report, and that gap up led to a big push. So one way to use this is to look for any gap up and see what's behind the gap up in price, and then you can act accordingly. I think that's the fourth thing I wanted to say. To recap, gap up gives you a signal to something significant is happening to a stock, and so pay attention and investigate and decide whether it's time to enter. The second is good top and bottom performance in terms of earning and revenue, and then breakout with big volume is always important. Perhaps you can combine the three, and you can have a very powerful stock selection. So I hope you can take this to heart as you consider your next investment in stock in the coming weeks.